and you spoke earlier about the 2020 election. Now that Maduro is in U.S. custody and he was criminally charged, has any more information emerged that you could share with us regarding Venezuelan election software and Venezuelan ties to tampering with the 2020 election? And would you consider speaking to Maduro personally in prison in New York to get some answers on Venezuela's involvement with the 2020 election?
No, I don't think I would be doing that. I think my lawyers would be very unhappy if I did that. Yeah, they've learned some things. Please.
What happens to the tariff threat to Greenland if the Supreme Court comes out and rules against you on the tariffs? And
well, I'll have to use something else. I mean, look,
are you willing to use force?
You know, take a look at the word license. Take a look at other things. I mean, we have other alternatives. But what we're doing now is the best, the strongest, the fastest, the easiest, the least complicated.
Sir, if you move ahead with the Greenland-related tariffs on Europe, you secured almost $1 trillion of commitments from them to invest in the United States. Does that go kaput out the window if that happens?
I doubt it. Look, they need that agreement very badly with us. They really do. They fought very hard to get it. So I doubt that. But we'll see what happens. We have a lot of meetings scheduled on Greenland. I'm leaving tonight, as you know, for Davos. And we have a lot of meetings scheduled on Greenland. And I think things are going to work out pretty well, actually.
Thank you, Mr. President. Could you still go to Paris for the G7 emergency meeting as offered by President Macron?
No, I wouldn't do that. No. Because, you know, Emmanuel's not going to be there very long. And, you know, there's no longevity there. He's a friend of mine. He's a nice guy. I like Macron, but he's not going to be there very much longer, as you know. And I think, you know, I have meetings with the people that are directly involved, not some of the people you're talking about.
Thank you so much, Mr. President, and happy New Year.
I've never seen this room like this. Is this a celebration of the first year? Yes. Have you ever seen it? I've never seen this many. I hope we have a very good structural floor. You know, this used to be a swimming pool. You're sitting over a swimming pool. I could see that happen. But we need a good structure here, don't we, huh? Yeah.
Thank you so much, Mr. President. Happy 1 year anniversary.
Thank you.
And my question is Syria. The Kurds, as the most loyal U.S. partners, facing attacks by some Syrian elements within the Syrian government. Will you do to ensure the Kurdish rights protected and their effective forces against terrorism in Rojava, Syria continue, as the Kurdish see you as a president does not abandon his allies?
Well, I like the Kurds, but just so you understand, the Kurds were paid tremendous amounts of money, were given oil and other things, so they were doing it for themselves, more so than they were doing it for us. But we got along with the Kurds, and we are trying to protect the Kurds. That's correct.
Ahead of your speech in Davos, can you give us a preview of what we can expect as far as, you know, laying out the plans for Americans to be able to buy homes?
I think more than anything else, what I'm going to be speaking about is the tremendous success that we've had in 1 year. I didn't think we could do it this fast. Think of it, it's just now 12 months, and you know, I say it often, we have the most successful country in the world. We have the hottest country anywhere in the world by far. And this country would have been absolutely stone cold dead. And I'm going to be talking about it. I'm going to be, because, you know, a lot of them could use some of the advice as to what we did. They need energy. You take a look at their energy policy, they're going to destroy themselves with what they're doing with the windmills and all the nonsense. They need energy help badly, or they're going to be in big trouble, and they need immigration help badly. How much longer do you want to go?
Let's call it.
I do. I have a very important call with President Erdogan, who I like a lot. All right, one or two more questions. Go ahead.
Thank you, Mr. President. During your second...
Go ahead.
One question about
Red. Yes.
Thank you, Mr. President.
The red blouse. Go ahead.
You talked a lot at the beginning of this about the economy, some positive economic indicators. Polling shows a majority of Americans don't feel the economy is doing well. Are you worried you're making the same mistake as President Biden?
No, I hope I don't make the same mistake as him. Look, I inherited a terrible, it's a great question, because we inherited a terrible, terrible mess between the border, between all the problems. The whole country was falling apart. And in 12 months, less than 12 months, I mean, in 12 months, we have the strongest border we've ever had. We have prices that are much, much lower than they were for the last time. We inherited very high prices. We inherited, remember this, inflation was at a historic high. We had never had inflation like that. They say 48 years, but whether it's 48 years or ever, we had the highest inflation, in my opinion, that we've ever had. Prices, because of that, were very high. I inherited, we brought down eggs immediately. Remember the first news conference, they were screaming at me about eggs. I was in the position for 2 days, and they're screaming. We brought eggs down to lower than what they were before. And by the way, they continue that way. We brought the prices down from when I came into office and from what Biden had, way down. We're going to bring them down further. But the job we did is a miracle. One of the reasons I'm doing this today is to explain. We inherited a mess, and we've made it a beautiful, beautiful picture. Think of gasoline at $1.99 in many states. $1.99 a gallon. It was $4.50, $5. In some cases, $6 or $7. We're at $1.99. And energy is so big that with energy, everything else comes down. But the prices are coming way down. And we're going to bring them down further. But we started up here with these guys. We inherited a country that was broken. We inherited a country, and I have a very warm spot. We've done very well with Venezuela. And by the way, that even in itself is going to help us bring down the oil prices. I mean, the Venezuelan oil, we've taken 50 million gallons of oil. We've taken 50 million barrels of oil out of Venezuela in the first 4 days. We've got millions of barrels of oil left. We're selling it on the open market. We're bringing down oil prices incredibly. And when they come down, and they've already come down, again, $1.99 a gallon for oil. Nobody thought they'd ever see it. All right, one or two more. Go ahead, go, yes.
President,
Yes.
I want to ask you about Iran. Is the military option still on the table? And can you assure us that the killing in Iran has stopped? And when regard to the Peace Council, which members have to pay $1 billion?
So with Iran, are you from Iran?
No, I cover the White House.
Where are you from?
I'm Palestinian American.
So with Iran, they were going to hang 837 people. And I let them be known that, and we let them know that if that happens, that will be a very bad day for them. And they decided not to do it. They didn't hang the people. I can't tell you what's going to happen in the future, but supposedly they've taken that off the table. But they were going to, last week, they were going to hang on Thursday or Wednesday. They were going to hang, I think, 837 people. And they didn't hang anybody. So we're just going to have to see what happens with Iran. Is the military option off the table? Go ahead.
Thank you, Mr. President. President Trump.
Thank you, President
Go
Trump.
ahead, please.
Thank you, Mr. President.
Go ahead, I'll take your question.
Okay, thank you. Thank you.
Thank you,
Go
Mr.
ahead,
President.
right here.
Thank you, Mr. President. You promised during your second inaugural to always put America first. I'm curious, how would you winning the Nobel Peace Prize improve the lives of average, everyday Americans? Why is this prize so important?
It wouldn't improve the lives of any, but what improved the lives of people are people that are living. I saved probably tens of millions of lives in the wars. You know, if you add up the numbers, just if you look at any one of those wars, you're talking about millions of people. You multiply it times 8. But when you look at India and Pakistan, that could have been 10, 15, 20 million people. Could have been more than that. So I saved millions of people. So that, to me, is the big thing. What?
You suggested a moment ago that perhaps the reason why a positive story about the economy isn't getting through is because of, bad communications people. But are average Americans wrong to still feel high prices? And how much longer does the White House hope that they...
So I think a lot of people are listening to the fake news a little bit. And I'm not blaming anybody. I think I blame ourselves. I think we've done a much better job than we're able to promote. We're not promoting. We're doing a great job, and we're sort of letting the promotion take care of itself. One of the reasons I'm doing this news conference, I think it's important. we have taken a mess and made it really good. It's going to get even better. But if you look at prices from a year or a year and a half ago, you look at the Biden prices, they were way up through the sky. And, you know, they use the word affordability. They just say affordability and they don't talk about it. They created the affordability problem, and we are solving it. We have solved a lot of it. Again, everybody agrees in this room, I think, gasoline prices have come per gallon way down. When that happens, everything else comes down, but they've come down way down. Many of the groceries have come way down. It's all happening, and it's happening strong. But if you go back a year and a half, 2 years, take a look at those prices and look at the prices now.
Mr. President of Venezuela, you made a condition.
Where are you from?
I'm from Spain.
Nice place.
Thank you. You made a condition that the political prisoners should be freed. It seems that they are not being as fast as they promised in the beginning. Would that be an issue for the current government?
They've agreed that they're going to let, I guess, most of them out. All of them. Depends on what they did. But they have released a lot of, released a lot of political prisoners in Venezuela.
Mr. President, earlier on last year, you had mentioned, you had indicated that you wanted to take back the Panama Canal. I know we've heard a lot about Greenland. Is that still on the table?
I don't want to tell you that. Sort of. I must say, sort of. That's sort of it. Okay, one more. Yes, blonde, blue. Yes, go ahead, ma'am. Go ahead with the computer.
To take control of Greenland is the ultimate breakup.
You mean the break? I think something's going to happen that's going to be for NATO than I have, as I said. Getting 2% they weren't paying. And they're buying a lot of things, I guess, to Ukraine. That's up to them, but they're giving them to whoever. I think that we'll work something out when NATO's going to. We need security and even worse.
That you believe that the reason you won an election is because God put you in this place so that you could save the world. Looking back 1 year, do you feel like God is proud of the effort that you've put?
I do, actually. I think God is very proud of the job I've done, and that includes for religion. You know, we're protecting a lot of people that are being killed, Christians, and Jewish people, and lots of people are being protected by me that wouldn't be protected by another type of president. No, I think a lot of people are very proud of the job we've done. We've had an amazing year. This has been one of the greatest years. Even some people that wouldn't necessarily love me instinctively, they're saying this was an incredible year. We've had an incredible year economically. Look at our border. Our border was a disaster. People poured. It was an invasion into our country of a lot of very bad people. Good people too, but a lot of very bad people from prisons and drug dealers and gangs and horrible people, murderers, thousands and thousands of murderers allowed into our country. And we now have the strongest border of any country. There's probably not a country, I guess North Korea has a pretty strong border, by the way, but there's not a country in the world that has a border like we do. And we took it from the worst border. We had the worst border in the world. Now we have one of the strongest borders in the world. One more question.
You said you're confident something's going to get worked out in Greenland, but Greenlanders have made it clear they don't want to be part of the U.S.
Well,
what gives the U.S. the right to take away that self-determination?
When I speak to them, I'm sure they'll be thrilled.
Mr. President, are you committed to keeping the U.S. in NATO?
I've had such a good relationship. I've made it so much better, so much stronger. It's so good now. NATO is so much stronger now. I don't agree with a lot of the things they've done, but that was done before I got there. I think NATO's been good. Sometimes it's overrated, sometimes it's not. But we have a strong NATO. When I came here, we had a weak NATO. We had a NATO at 2%, and they weren't paying. You had a nothing NATO. NATO's, whether you like it or not, it's only as good as we are. If NATO doesn't have us, NATO is not very strong. Yes, no, behind you, please.
Thank you, President Trump.
Yes, go ahead.
Greatly appreciate it, sir. We heard a long list of accomplishments from the last year. Could you cherry pick the top 3? And then looking forward, what are your 3 most important priorities in 2026?
So I think the building of a really powerful military has been a great achievement, and that would include the Venezuela thing, that would include the attack on Iran and the wiping out of the nuclear threat. I think that's been really amazing what we've done militarily. I think what we've done in business has been incredible. We have $18 trillion coming in. Plants are being built all over. Thousands of plants are being built all over the country. 18 trillion is a record. No country has ever come anywhere even close to that. I think that's a record. And I think that most favored nations for drugs is something that nobody thought they'd be able to get. Tariffs helped me there because the nations would have never gone along with it if I wasn't able to say, if you don't go along with it, we're going to put a 10 or a 15 or a 20% tariff on your nation. And they went along. And our drug prices are going to come down at numbers never even seen before, never even thought possible before. So those would be 3 things. Thank you. Thank you all very much.
All right, everybody. Wait. Yep, he's done.
Okay.
We kept thinking that we were on the last question.
Walking off, but...
and hesitating.
Yeah.
So we used to see that with President Biden, sometimes stopping and taking another question as he walked his way out. Of course, that was President Trump there at the White House before he heads off to Davos, marking really his first year in the White House, talking about his accomplishments. He's been talking for over an hour, hour and a half or so, but then taking some questions from reporters. Talked a lot about Greenland, talked a lot about NATO and the NATO alliance. He did say, and I think this is crucial, especially as he heads over to Switzerland, we've had such a good relationship, talking about NATO and saying NATO is so much stronger now, only as good as we are now. So didn't seem to say that they are backing out, but nonetheless, certainly keeping allies on their toes as we speak and as he heads over to Davos.
I want to bring back in Christina Ruffini. She's a reporter who covers geopolitics here at Bloomberg News. She joins us here in the Bloomberg Interactive Brokers studio. We could kind of go around the world with you from Panama to
Panama's
Greenland
back on the board. Yep.
Iran. Where do you want to go? What sticks out to you from what we heard?
I
from
do
the
want
president?
to summarize a little bit what he said about Greenland, because that's what everyone was waiting for. That's what we were waiting through this kind of melange of topics for the last 105 minutes, according to our Bloomberg White House team. He was given a couple outs. First of all, he was said, how far are you willing to go to acquire Greenland? And the president said, you'll find out. And that's what Europe is waiting for right now. How far is he willing to go? He also said, he was asked about the tariff threat. If SCOTUS comes out against your own tariffs, and that's how you're trying to get Europe to heal when it comes to Greenland, what are you going to do about that? And he said, we have other alternatives. We'll use other alternatives. And then finally, a reporter in the front row there from ABC said, look, Greenlanders don't want to be part of the U.S. Why are you taking away their agency? And he said, when I speak to them, I'm sure they'll be thrilled. And this has kind of been his attitude about this issue. He's sure folks will come around. This may be the one issue that Europe is not willing to go with him on, and they may enact some policies that the president will not be happy about.
I always think about this is certainly a transactional president. We've all talked about this a lot, and that this is someone who is used to making a deal and coming out with a first offer, and then there's obviously more offers to come. And I guess we just have to see whether or not, how much he backs off, where it ultimately ends here.
Right, and this is, I was actually texting with a foreign minister just before you guys came to me, who is European and is Nordic, and was saying this is such a big deal, especially because of the population. It's a very small population. It has a very fragile culture. It's only 40,000 people, very protective of their own culture, and this is such a huge deal, not only for them, not only for Denmark, but for the Nordics, for the Scandinavian countries. They feel like they're really in the crosshairs of a country they thought was their ally. Go ahead, Tim.
Has the president or the administration articulated the reason beyond the reason for a takeover or an acquisition of Greenland that would be for defense purposes beyond the ability for the U.S. to have bases there? Because the U.S. already has an agreement with Greenland that it does and can have military bases there. What is the administration articulated about that?
It's a good question, and I would say not to the satisfaction of European officials who have started to say, we think this is about something else. We think this is about natural resources. We think this is about spheres of influence. Someone told me today they think it's about Trump looking at a map and having the U.S. be the second largest blob on the map next to Russia.
Which is not the way that, globes and maps work in terms of in terms of size. I mean, this is actually a big part of the discussion over the last few weeks. Is like, this is actually the size of Greenland. It's not as big as it looks on the map.
Right, we're working on the Mercator projection. It's not. I mean, it's the biggest island, but it's not as big as it looks. Europe is really nervous, and what we're going to have to see is, Europe was already seeing some fractures with this administration when it came to Ukraine policy. That has now been put on the back burner, much to the difficulties of Kyiv. They're trying to keep enthusiasm there and keep Europeans united on that issue, and now you have this whole other issue that is really going to the core of NATO. And the president was asked about NATO, and he was given an out. Basically he was given an out to say he doesn't want to be in NATO anymore, and he kind of sidestepped it and said the alliance is stronger than it has ever been. No one has done more for NATO than I have been. I think that's a bit of a positive sign for Europeans, but it's not going to be enough to quell worries, especially ahead of Davos.
Yep, it's not like he said, we're thinking about leaving. Like, that would have been certainly something that would have caught all of our attentions. Thank you so much. Thanks for hanging around on this.
Thanks,
Christina Ruffini, Bloomberg News reporter, covering geopolitics here in our Bloomberg Interactive Broker studio. Let's get back to the markets. Just got about 22 minutes to go until we wrap up the trade on this Tuesday. Charlie, take it away.
All right, here's what's going on. We've got the Dow, the S&P, NASDAQ. We are very close to session lows on the S&P 500 index. We are trading below 6,800. Right now, we are looking at a loss of 2% on the S&P, down 145. The Dow down 863 points on the Dow Industrials, drop there of 1.7%, while NASDAQ is now down 571 for NASDAQ. The composite index, a drop there of 2.4%. Every single member of the Bloomberg Mag 7 index is down today. That index hard hit, down 3.2%. The 10-year, 4.28%. The 2-year, 3.59%. And the 30-year at 4.91%. Spot gold right now up $79 the ounce to $47.50. That is a gain of 1.7%. And West Texas Intermediate crude up 1.5%, $60.34 a barrel. Coming up after the close of trading, we will be hearing from Netflix. Right now, Netflix unchanged at 88 even. I'm Charlie Pellett. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stanovic, live here in our Bloomberg Interactive Broker Studio. Always a good day to talk about U.S. Treasuries today, especially a good one, to say the least. I mean, just take a look at what we see with long-term U.S. yields.
Yeah, hitting a 4-month high today. Investors reacting to a rout in Japanese bonds. News that a Danish pension fund is planning to exit Treasuries. All things that we've talked about throughout the program today. But we really want to do a roundtable and go deep into Treasuries.
Yeah, and I should put out Bob Michael of JP Morgan Asset Management saying, when it comes to foreign investors, the U.S. Treasury market nice and deep and liquid, and where else are you going to kind of go? So we got to
see if everyone agrees with that.
We shall see. Let's bring in our roundtable. Michael McKenzie, Bloomberg News rates reporter, and Ira Jersey's Bloomberg Intelligence chief U.S. interest rate strategist, both joining us from New Jersey. Ira, I want to start it off with you. It started as a kind of unremarkable day on Tokyo trading desks, that quickly changed into what some of the market participants described as the most chaotic session in recent history. Is Japan the right place to start? I'm just trying to tie in all the geopolitics. Japan, I think, is always a special story, and they've had things that they've been dealing with for a long time.
Well, let me say that, G3 plus, which is the Eurozone, UK, US, and Japanese rates, they get these bouts of 100 correlation, right? Correlations of 1 every once in a while. And you've seen this time and again over time. And even though Japan is going its own way with monetary policy, right? It's hiking interest rates. It sees a different dynamic than the Eurozone or the US. When you have a 26 basis point sell-off in their 30 and 40-year debt because people are worried about Japan's fiscal sustainability, well, that's going to reverberate throughout the markets. And that's what you saw, right? This was a global rate sell-off. This was not a U.S. story. The idea that, it's a Greenland story and all these other headlines is just wrong, in my opinion. Now, did we see some volatility during the day on some of these geopolitical contents? Yes. But it was more like 2 or 3 basis points. It wasn't 10 basis points, right? The 10 basis point sell-off was, hey, global rates are selling off. We have to get out of rates now.
Michael McKenzie, come on in here. Do you agree with Ira's assessment that it's about Japan and it's about the globe rather than it being about the Greenland news, about European news? Is that your assessment?
Yes, it is. And in fact, funnily enough, over the first 2 weeks of this year, I was asking investors what was your tail risk scenario, and they all said JGBs. And Japanese yields have been rising this year before, of course, we saw an explosive rise in the long end overnight. So Japan is definitely a test case for the bond market. It has, over the last 2 years, been selling off in fits and spurts. And it does tend to weigh on the US because the US is itself not in fiscal good shape, as indeed most of Europe, they're not in good fiscal shape. So investors, it's why the curve steepen is so popular. People are expecting that curves will steepen because, again, you have to account for the fact that there's a lot of debt that needs to be refinanced over the coming decades. And I think that really was the big tell. I mean, what was interesting, we did hit the day high in yields in treasuries when the announcement came about the Danish pension fund. But again, they've only got 100 million of treasuries. So when I was talking to investors this morning, their view was this is symbolic. It's really about the JGB market. And if there's a real sense of a global pushback, or the bond vigilantes globally saying, you're going to have to start paying more attention to the fiscal outlooks here for these G10 countries.
Well, what if the
I think
go ahead, Ira.
Matt. The whole thing about the Danish pension fund, it's not a big number. I think people are a little bit fearful that it could just be the start of a de-dollarization trade. But the thing is that most international investors that own treasuries are and own long-term treasuries, right? So the riskier part of the market, what we call duration, right? Those that own the longer duration and the more market risk tend to own them for liability matching purposes. So you own a treasury because you're an insurance company, for example, who has a dollar liability, and because you have a dollar liability, you have to own some kind of dollar asset. So it's all liability matching. So the idea of forced selling or political-based selling is just not going to be as dramatic. And if Macron came out and did his anti-coercion thing and said, forced central banks in Europe to sell their treasuries, you'd see short end yields rising a lot, not 10 years, right? The central banks around the world, they own a lot of short maturity, highly liquid securities. They don't own 10-year and 30-year bonds. So keep that in mind too when you're looking at these market reactions for, hey, is there a geopolitical thing going on, or is this just more of a general market reaction?
All right, and I know we're talking treasuries and U.S. debt, but what I want to throw into it is gold. That is up another 3.5% in today's session. Michael McKenzie, when we talk about the U.S. dollar or dollar-denominated assets, I keep thinking about what happened to gold last year. We're already up almost 10% year-to-date here in 2026, just a couple of weeks in. That gold trade on the back of kind of fiscal houses around the globe, does it tell you something more significant?
I think it makes sense, and I think what you're looking for here is, as Ira's just pointed out, I mean, treasuries is a $30 trillion market. A lot of people own treasuries around the world. Sovereign wealth funds, pension managers globally. You can only come and buy lots of debt to offset, your liabilities through U.S. treasuries. Now, you could talk to the likes of PIMCO who say, we like Australian bonds and we like parts of the UK market and we like some of the smaller Europeans and some of the LATAM countries. But those markets are so tiny, so it doesn't really move the needle for them. So if you're looking for a hedge, and I think if you cast your mind back to last April, May, we went through a similar period where everyone was saying, oh, sell America, sell America. It was actually hedge America. And hedge America is you hedge selling the currency, or you look to buy gold or another type of commodity. You still have this underlying position in U.S. assets, which is going to be very difficult to liquidate straight away. So I think what we need to be looking for in this year is if gold continues to rise and dollar continues to weaken, are we actually seeing any substantive selling of U.S. dollar assets? And that's really the thing to be looking for in the coming months. But I think a lot of people, again, when I was asking investors this morning, they're saying, well, we all know what happened in April, May. Essentially, the market, starts sending a message to the administration, and then we get, is a taco trade back on the table where Trump ultimately turns around and says, okay, I'm going to back off. And don't forget, we do have Scott Bessent as a Treasury Secretary who, again, came out this morning and said, look, calm down, and we know that if push comes to shove, something will happen.
Ira, that seems like a really important distinction that Michael McKenzie just made there. Hedge America versus sell America, and especially when we're looking at demand for U.S. Treasuries. You agree? Do you see that? Do you agree with that?
Yeah, well, more or less. I mean, look, foreigners have not been net buyers of treasuries for almost a decade now. So it's not like the U.S. is reliant on the new debt that's being issued because of deficits to be financed externally. Now, that debt gets rolled over, and then we have more liabilities, right? Like I mentioned, insurance companies, who are insuring a tanker, they're going to go out and buy 2-year treasuries or something like that in order to hedge their liabilities. But generally speaking, most of the U.S. deficit is financed internally at this point. Now, part of that's because, believe it or not, the savings rate, even though it hasn't gone up a ton, incomes have gone up a lot. So actually the savings rate is relatively high compared to the not too distant past in the United States. And ultimately, whenever you buy some type of fixed income asset, someone's buying a treasury somewhere down that chain. It's way too long to explain here, but if you do a flow chart, you can see at the very end, someone's buying a treasury. So as long as you have, people
trade, then we'd see markets further.
Yes.
We'd be lower more.
Lower more, and the idea being that this is the kind of thing. Now, we may see this for a couple more days, but if you think about back to April, then, when he was speaking at that time, you didn't really have the sense that he was going to back off, and then all of a sudden he backed off. So it's the same kind of thing where you have this ratcheting up of rhetoric, and behind the scenes, people are kind of thinking, if this gets any worse, he's just going to pull it off the table because
meaning the market reaction gets worse?
If the market reaction gets any worse,
like when the bond market got yippy in April,
right? And the bond market today may not be, like to Mike's and Ira's point, the bond market may not be being driven by Greenland, although it does seem like Bessent kind of thought it was based on what he said. But I mean, the idea that Japan is its own thing and that's freaking out bond yields, that's real. Both things can be true. In the stock market, it's very reactive. So you're looking at what's in front of you. Should we buy in? What we were seeing early in the session was a lot of retail enthusiasm offsetting some of the Wall Street pros. So at one point the S&P was down less than 1%, and then all of a sudden it just whoosh went down, and what we think happened was the retail buyers just sort of got exhausted, and all of the pessimistic pros were left, and they're selling. But it's not like this huge sweepy move of oh my God, Armageddon is here. Right. It's more like if we invade Greenland, this is going to be bad.
What do you make, though, when the Treasury Secretary, Scott Bessent, understands financial markets? He knows when he comes out and says something and say, hey, I spoke with my Japanese counterpart, or he's like managing this situation. That's what it feels like. What are we supposed to take away from that?
It's hard to know. Is
he nervous?
Well, yes. It's hard to know exactly what he's saying versus what he's saying to please his boss, because there are only so many things there are only so many different ways that you can mollify everybody. You can tell everybody calm down, but really if his boss wouldn't speak for like a few days, we probably would get people to calm down. But if you keep ratcheting up the rhetoric, this is what's going to happen. Now the bond market's a different kind of animal, so he can speak directly to them, but stock traders aren't going to listen to that. If they're thinking, because you can pull out, it's the same thing where you have all these insurance companies that own treasuries. With stocks, you can pull out and then get back in. It's not, that difficult. Whereas with treasuries, you got to kind of hold them.
So NVIDIA's down 4.3%. It's the biggest drag on the S&P 500 right now. Just connect concern about geopolitics and concern about the U.S.'s role in the world to NVIDIA selling fewer chips.
It's all about growth. So if you are concerned about economic growth, then you're going to sell those leaders. And NVIDIA is really a growth play. Now, the moves in interest rates are one aspect of it, but if you are concerned that there is going to be a downturn in the market long term, or even, for a month, you get out of the growth names. You mentioned, consumer staples. Well, yeah, because we're all going to need toilet paper no matter what. Yeah. Or soap or whatever, but we don't necessarily need silicon chips. So that's where we need the economy to keep moving along. We need spending to keep moving along. And if there are hiccups, you go right after the growth names. Discretionary is also down, similar reason.
Netflix after the closing bell. Earnings matter. 30 seconds here.
Earnings do matter, but really that's a Warner Brothers story. I mean, you're looking at whether the deal is going to go through and how much they're going to have to spend and, cash and all that. But,
so bank earnings mattered.
Well, yeah, bank earnings really do matter.
Other earnings will matter.
Yeah. But, Netflix, we're watching it, but not as closely.
All right. Good. Thank you so much. Eric Weiner, Senior Editor, Equities Americas at Bloomberg News, joining us here in our Bloomberg Interactive Broker Studio. Hey, folks, we're counting down to the closing bell. We've got some selling, as we've been just talking about, so we'll get those closing numbers. Take a look at some stocks on the move, and we have a bunch of earnings coming your way after the closing bell. We've got, of course, Interactive Brokers, Netflix, and United Airlines. Do not go anywhere. Heading over to our TV colleagues, the closing bell starts now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Katie Greifeld taking you through to that closing bell with a global simulcast. It started. Carol Massar, Tim Stenovic, they're in the radio room. Welcome to our audiences across all of our Bloomberg platforms, including our partnership with YouTube. A massive sell-off going on right now in U.S. equity markets. We should point out 67.89, that's the low in the S&P 500 on the day. 67.45, that's your 100-day moving average. S&P right now, Carol Massar, at 67.94 and change.
Yeah, I mean, we're hovering near our worst levels of the session. We saw, selling certainly accelerate kind of early mid-afternoon here. So definitely seeing, I think it's, what's interesting is it's broad-based selling, right? We're seeing really across the board investors. I wouldn't say they're running for the exits. It could be much worse, but it'll be interesting to see what we see in tomorrow's session.
Yeah, 4 stocks lower for every 1 stock that's higher in the S&P 500. Today, with the S&P 500 down just over 2%, the worst day going back to October of 2025, Katie. The S&P fell 2.7% on that day. Right now, we're trading at just about levels last seen on December 18th.
I do want to point out volume through the roof right now on the S&P 500, about 41% higher than the 30-day average. But as Romaine and I have been talking about, the small caps still outperforming, still down, but doing better than the big guys.
Yeah, believe it or not, an outperformance by the Russell, even on a decidedly down day. And of course, the elephant in the room is not just the geopolitics, but also earnings season, which really kicks into second gear in just a few minutes with results out of Netflix. Red across the screen here on the Tuesday, the start of a holiday shortened week here in the United States, coming off the Martin Luther King Jr. holiday observance. The S&P 500 down more than 140 points, or about 2% here on the day. The Dow Jones Industrial Average down about 1.8%. The NASDAQ indices each down more than 2% here on the day. And the Russell 2000, relative outperformance, but still deep in the red, a drop of about 33 points, or 1.2%.
All right, so stocks down across the board. Let's go to the S&P 500. 401 names losing ground on this Tuesday. 100 to the upside, Katie, 2 unchanged.
Let's take a look at the sectors as measured by the circle. And it looks pretty scary today because it's all red in terms of what really dragged us lower. It was information technology down by about 3% as a sector. Consumer discretionary, financials also taking quite the hit today. In terms of what did well, that tiny slice of green on your screen, that is consumer staples managing to squeak out a gain of about 0.1%, Carol.
United Airlines crossing the wire right now. Let's get right to it here. We had gotten a little bit of a sense here of how the airlines were doing after the results last week by Delta. United saying that in the fourth quarter, CapEx at $1.89 billion. EPS looks like a beat at $3.10 a share. The street was looking for $2.92 a share. Operating revenue, $15.4 billion, relatively in line with estimates. The shares up fractionally here in the after-hours trade.
Meanwhile, let's get to Netflix here, crossing the terminal. And this is the red headline. When it comes to 2026 revenue, the outlook there, $50.7 billion to $51.7 billion. The estimate had been for $50.96 billion. Meanwhile, you take a look in terms of what we saw when it comes to the fourth quarter. You saw fourth quarter revenue come in above expectations, coming in just over $12 billion. The estimate had been for $11.97 billion, and then their free cash flow in the fourth quarter coming in at $1.87 billion versus $1.46 billion. So when it comes to the look back, fourth quarter EPS also coming in above expectations. It looks like we beat on a lot of metrics, but then again, you go to the 2026 numbers, ad revenue seen about doubling versus 2025, and their second half 2026 operating income growth to exceed the first half, but still you can see that investors finding something to not really like in this report. Netflix shares currently down about 1% after hours.
Yeah, perhaps as a cautious forecast. It cited higher program spending, the cost of closing its deal with Warner Brothers Discovery, so certainly a lot hinges on that if that deal goes through. The company does plan to increase spending on films and TV shows by 10% This year, it forecasts earnings of 76 cents a share. Wall Street wanted to see 82 cents a share. We'll see if that Warner Brothers discovery, I mean, I'm sure that's going to be the question that analysts are looking for, especially now as the company has changed what its offer looks like, going all cash at this point.
All right, so Netflix still down about 2% here in the aftermarket. We're certain that that will come up on the call with analysts. In the meantime, let's go back to United Airlines, because certainly a great read on the consumer. We did see United actually beating Wall Street estimates for the fourth quarter. It anticipates a strong 2026, driven by strong demand from high-spending domestic passengers and those international travelers. So they're looking at full-year earnings per share for 2026 to be in a range of $12 to $14 a share, compared to the $13.06 that analysts are predicting. Keep in mind, their results driven by demand, again, for those premium seating and overseas travel. Premium revenue up 9%, loyalty revenue up 10% in the fourth quarter, and that stock popping up now, up about was up about 2.25%, now up about 1.5% here, guys, in the aftermarket.
All right, I do want to go back to Netflix here. We need to dive a little bit deeper into these numbers, because this isn't just a revenue and growth story, it's a cost story as well, with the company saying that it will boost by about 10% its spending on programs. But it released a supplementary statement that's on its website talking about what's actually driving that. And a big driver of this, no surprise, is actually non-English language titles, saying they accounted for over a third of the viewing that we saw in the most recent quarter. They specifically cite Korean, Spanish, and Japanese shows. They also talk about this big push into other markets in Europe, including Denmark and Norway, speaking of which, but also the idea of an expansion of some of their comedies, an expansion of some of their live events, all of which, we should point out, will cost them a lot more money. And the question is, are investors going to be comfortable with that spend, particularly potentially on top of another $82 billion or so that it might have to pay up if it does win the rights for Warner Brothers?
Well,
Yeah, go ahead, Katie.
I was just going to say, it's interesting. You can also see in the commentary, Netflix plans to pause its share buybacks to accumulate the cash it needs to help fund that pending Warner Brothers acquisition. They amended that bid to be all cash, as a result, pausing buybacks, typically not exactly popular among shareholders.
Yeah, and we should point out that this all cash bid, which we keep talking about, a lot of that, more than half of that, is going to be actual debt. So you're not only talking about a depletion of cash on the balance sheet, you're adding debt to the balance sheet. And then, of course, there's this general idea here as well of all the other spending that they have to do.
Yeah, continuing to look through the supplemental materials that Netflix released in these earnings, shares down after hours by about 3.3%. The company said originals that Netflix originals that thrilled audiences everywhere. Of course, K-pop Demon Hunters, Stranger Things, Wednesday, but then also an entire section about non-English language titles that remained widely watched. The Great Flood in South Korea, Love Untangled, Bon Appetit, Your Majesty. In Japan, people like The Last Samurai Standing, Season 1. There are numbers in here, too. That title, 21 million, for example. Spain had several popular shows, Brazil. Netflix making the point and saying this, hey, we've got something for everyone out there, no matter where you live, no matter what you like.
I want to go back to what, Romain was talking about, the spend. And certainly we talk about these guys all the time, all of the streamers, in terms of the spend in order to get content so people are signing up and staying on their platforms. Having said that, the company, again, going back to the year forecast, seeing operating margin 31.5%. The estimate was above that at 32.4%. Sees free cash flow about $11 billion. The estimate was almost $12 billion. But I want to go back to the commentary. The company saying it sees, quote, plenty of room to increase margins. Company intends to grow operating margin each year. So, right, we talk about the spend, but we also talk about, what that does basically to the profitability, Romain, of that company.
And we talk about the margins for the most recent quarter coming in at about 24.5%. That's the operating margin, we should point out. And that is up from about 22% year over year, but it's still relatively in line with estimates. And I guess the big question I have, and we should just a reminder that conference call, which is really just a kind of a one-on-one interview, more or less, kicks off in about, I think, about 40 minutes time here. They've got to really reconcile this idea of how much you spend relative to the actual return on profitability. And does this, I guess, when I reading through this report as a Netflix user, the first thing that comes to my mind is, does this mean they're going to have to raise prices, subscription prices?
Raise prices again.
Yeah.
Yeah, I mean, Netflix used to be huge news when the company raised prices. It went years and years without raising prices. And people would say, wait a second, my cable bill's going up every single year. I'm paying more and more.
Yeah.
Is that what Netflix is turning into? And, how elastic are these how much price elasticity does the company have?
Yeah, all right, so lots of things that can come up certainly on the call. Good point. Netflix, guys, down about 3.5% here in the aftermarket. United Airlines also out with earnings after the close, and that one is now rallying just about 1.8%, so we'll continue to track for you. That is a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We do call it the closing bell. Romaine and Katie, of course, continuing there on the open on, on the close. It's, Monday, Tuesday. Yeah, if you don't go anywhere. On the close there on Bloomberg TV. And, of course, Tim and I continuing right here on Bloomberg Business Week Daily on Bloomberg Radio. We'll see you again. Same time, same place tomorrow.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. We are looking at Netflix shares down 4.8% in the after hours. They're continuing to move lower. This after the company reported results for the most recent quarter. Concerns about the guidance and boosting spending. The company saying even though they largely beat Wall Street estimates, they issued a cautious forecast for the months ahead, citing higher program spending, and then, of course, Carol, the cost of closing its deal with Warner Brothers Discovery.
Number of customers growing by almost 8% last year, topping 325 million subscribers. Let's get to our team, who certainly follows it, and, of course, our own Chris Palmieri, who's been following this company and the ins and outs of the pursuit of Warner Brothers Discovery. Chris, they're out there on the West Coast. Chris, you've known this company, you followed it. Investors not too impressed. They're worried about, I guess it seems like, the spend that's out there. But walk us through what really jumped out for you in their reporting.
Well, first of all, obviously, investors have been really concerned about the Warner Brothers bid. The stock has lost a lot of money since in October when it first came out that Netflix was interested in bidding. And you still see concern here. I mean, they said they've spent $60 million already on pursuing Warner Brothers. They're anticipating another $275 million in cost for that. They paused their share buybacks, which were considerable. They had $8 billion left in their buyback program, so they can conserve cash for the Warner Brothers bid. So if you're concerned about all this, there's certainly enough in there for that.
I'm just looking at some of the headlines from here, and given, Chris, the reaction from investors over the last few months as Netflix emerged as a bidder, it hasn't exactly been a positive one. What's the case for why Netflix actually needs these assets? Because this is a lot of money to spend, especially when investors are getting increasingly concerned about how much money the company's spending on content.
Well, they do in their letter to shareholders sort of cite the broader case that they're, no longer just competing against, HBO or Paramount Plus or whoever, that they're competing against YouTube, TikTok, Instagram, and that they really only have a still small share of overall TV viewing, about 9%. And by acquiring this great library and these facilities, Warner Brothers, they could really increase their production of stuff all around the world and get into some new business, more consumer products, more video games. And so that's their argument. Like HBO Max would give them the opportunity to offer different pricing plans. So somebody just wanted HBO programming, they could get that instead of Netflix. So those are the things they're talking about. I'm
going to play Netflix's accountant. The content that they do get, they're going to get a lot of content, right? In one move.
If they get the deal.
If they get the deal.
Yeah, huge. I mean, it's a massive purchase in the 80 billion range. There's numbers that came out today of Warner Brothers projections of what their studios and streaming business are going to do out 5 years, and it's a potentially huge boost. Batman, Bugs Bunny, everything you could imagine for Netflix to own. But they've also been investing in their own licensing deals. Huge deal just announced with Sony. Universal kicked in as well this month. And they're even licensing shows they noted from Paramount, 20 programs. So huge purchases of every variety.
Does Netflix, Chris, get these assets?
What, you mean, do they ultimately win Warner Brothers,
Yeah.
you think? Is that what you're saying?
Yeah. I know, that was quite a few chuckles.
Yeah, yeah. Well,
to be expected with a question like that, where you can't really see the.
Hey, it's either yes or no, right?
But look, they're the favorable.
Right. This is like, well, let's do the poly market prediction
Exactly.
here.
But they are the favorable. Yeah. They are the favorite. No question about that. It's the board has said this is a better offer.
Well, they're the favorite from Warner Brothers' standpoint, for sure. But there's certainly a community of people that think, smart people, who think that Paramount's going to increase the offer or that this is going to fail from a regulatory standpoint. So to pick the winner from here is a real dicey proposition.
In terms of their subscriber numbers, where does that, I mean, this has been something investors have been concerned about, right? The sustainability of their growth. Based on what we got from the company, how does that, push back on that argument, or does it not?
It was pretty strong growth, 8% to past 325 million. That was at year end. That was in line with what investors were forecasting. Stronger numbers were the sales growth, which any company would kill for double digit like that. They said where it's coming from. It's new members all around the world and price increases. They said they're going to increase prices again this year. They weren't specific, so it could be just in certain markets. Advertising business is growing. We all wondered how big a deal that was going to be. They said it was 1.5 billion last year. That's only about 3% of their overall revenue. But they said the number was going to double this year. So that part of it's growing. So as long as they can keep the prices climbing and the subscribers growing and the ad sales coming, they're going to see that revenue growth.
I just want to, especially for those people who are listening on radio, Netflix shares are down about 4.5%. They've been as low as a 5% decline here in the aftermarket. This is after the company plans to boost spending on programs in 2026, crimping profits at the massive streaming company.
Hey, Chris, before we let you go, pricing power that the company has. You mentioned price increases that we could see. How much pricing power does Netflix have in the U.S.? Like, there's no shortage of places to go for content, but Netflix, they're kind of the OG.
Mm-hmm. Right. Well, I think the big story of last year really was that everybody raised prices, and we didn't see huge defections of subscribers. And it's certainly getting to the point where it's getting very pricey. Netflix has kind of been like the video utility. That's the one you can't cancel. It's got just about the lowest churn rate of subscriber cancellations of any of the big ones. So how long can it continue to do that? And maybe they would say if we have Warner Brothers, it's going to be a long time.
Hey, Chris, for someone who's watched the twists and turns of the pursuit of Warner Brothers from Netflix, what more might we likely get on this, pursuit of the company on the analyst call, or basically nothing new?
Well, I think we'll see a lot of people maybe asking about their commitment to theaters. Ted Sarandos gave an interview last week, and he said 45 days the Warner Brothers films will be in theaters. So, there'll be discussion of that. That's a big issue all around the world. Our theaters in trouble. And then, I think they'll be asked more about the rationalization for the Warner Brothers deal, and do they really need to do this?
All right, shares of Netflix now down about 3.9%, so off their worst levels of the session. Chris, thank you so much. Really appreciate it. Chris Palmieri, Senior Editor and Entertainment Team Leader here at Bloomberg News out there in our bureau in Los Angeles. We're going to stay on Netflix, though.
Yeah, let's bring in Eric Clark. He's Chief Investment Officer of the RIA AccuVest Global Advisors, about $1.2 billion in assets under management. Portfolio manager, too, of the Alpha Brands Logo ETF. He covers about 200 consumer stocks, including Netflix. It's the 11th biggest holding in the Logo ETF. Eric joins us from San Diego, which I understand it's like 69 degrees there. It's not like here, Eric, where the high today was 21 degrees. So
don't rub it in.
Yeah, I don't even know why you guys watch Netflix in San Diego. You just should be playing outside all the time. A decline of 4% after hours right now. Are you buying more Netflix?
I will buy more Netflix tomorrow. Absolutely.
Because?
And it's 75 here, by the way.
Oh, my bad.
Thanks very much for that. We're done with this interview. All right, so why are you going to be buying tomorrow?
Well, bigger picture, nothing's really changed with the business. It's just that people have left Netflix stock because of the Warner Brothers, the time that it takes to get a deal done like this. So people just say, I just don't want to have my money tied up in something that's going to be a little more uncertain than maybe, quote, dead money. That's the opportunity. So the stock's down over 30% and business is still doing really well. And at this point where the stock is now, I don't even think it matters what the outcome of the Warner Brothers deal is. You're just getting the stock at a great price here.
So
you just have to be patient. That's all.
Are you saying that the Warner Brothers Discovery deal will happen? Netflix will get that?
That one is a little tough because there are the unknowns of the regulatory part. I think generally speaking, I agree with the concept that Netflix really is competing with all of our time, not just, other streamers or cable. It's YouTube and TikTok and Instagram, et cetera. But within the streaming, within the quote, kind of core cable TV viewing, they obviously are the dominant one. It's just, there's much more than just streaming, and there's room for every brand here. Netflix is the first place that people generally start. That gives them that pricing power, and then we bolt on the Paramount for the Landman and Mayor of Kingstown, et cetera, and HBO Max, et cetera. But the assets in Warner are so powerful, and they are in the best hands with Netflix. It's impossible to know about the regulatory stuff.
But Eric, what if Netflix doesn't get Warner Brothers? Do you still like Netflix going forward, or do you think then this would be a big loss? We've done some reporting. I think we've had some stories that say this is going to help shape Hollywood, for years to come. Whoever gets this property. So I'm just curious, if they don't get it, Netflix does not get it, then what?
Well, I think they're just going to go back to the same playbook that has, driven 17% annual subscriber growth for the last decade. I mean, nobody can compete with them on the content spend. So they're just going to go back to doing the spending. Maybe they do some tuck-in acquisitions. It's hard to know, but you have to give management the benefit of the doubt. They've done, generally speaking, a pretty amazing job building this brand. And so you have to assume that they're going to continue making solid decisions, and you're getting a stock that's 30% off the highs with strong free cash flow. I know they will continue to grow margins. They will continue to grow subscriber growth. The ad tier is growing like a weed. So there's just a lot to like here. So I love this thing on a dip.
I'm looking at the 10 most watched movies from the second half of 2025, Carol. K-pop Demon Hunters, Happy Gilmore 2, Frankenstein, My Oxford. I did not see one of these.
I know. I was just thinking.
Movies.
The Woman in Cabin 10, A House of Dynamite.
Those are movies, not shows.
Oh, okay.
And even the top 10 shows, didn't see a single one of them. Wednesday, Stranger Things 5, Untamed, Squid Game, Stranger Things. Eric, this is interesting. The way that people watch the different seasons of Stranger Things in the second half of the year in anticipation for season 5. In the second half of the year, different seasons of Stranger Things were 3 of the top 10 shows most watched on Netflix. So is that an issue for Netflix moving forward? That's it for Stranger Things.
No, I don't think so. They will continue to bring out other stuff. I mean, they're just so good at this concept. I mean, listen, if they get Warner, that's even better because there's so much more that they can do to refresh that entire library.
Oh, so you're saying like, okay, Happy Gilmore 2 was in there, so maybe like another version of a classic HBO show or another version of classic Warner Brothers movies? Is that what you're saying?
I think you get a bunch of creative people in a room and they take something, let's say Sopranos, for instance. What could we do to refresh Sopranos in the same theme? There's just so many things that they could potentially do.
Hard to
again, because you need the budget and nobody else has the budget.
Does Paramount Skydance, if they get the assets, do they have the creatives? Do they have the budget to do with the catalog what you think Netflix could do?
I don't think that they can compete with Netflix. And remember, they're still going to have a metric ton of debt to deal with. So I look at this like a private equity owner. If I owned Warner and that was my baby, who would I love to be able to sell that library to that would put it in the best shape for the rest of time? And that's clearly Netflix. It is not Paramount Sky.
Okay.
All right, so top of mind on the call with analysts and investors, Eric, like what is it that, we need to be asking this company right now, or is it just really all about their pursuit of Warner Brothers?
Well, I just think that there's obviously just a lot of noise, and there's a lot of assumptions. There's a lot of assumptions in a lot of industries like AI too, but I think if you widen the lens, nothing has changed. It's still an important part of people's consumption. It's still an absolute crazy good value at even at $25. I mean, I go out to dinner in San Diego and you get a drink and a half and it's $25. I can watch an unlimited amount of content on Netflix. So there's still a lot of value there. And, recurring revenue business, global in size and scope, reaching kids as well as my mom at 83. Male, female. I mean, there's just a lot to love about a business like this. And I feel the same way about Spotify too. Similar business, slightly different category, but for the same reason. And Spotify's off 35% too.
It's interesting too. They talk about, we've already begun to launch video podcasts from our partnerships with Spotify, The Ringer, iHeartMedia, and Barstool Sports. And have just announced 2 new original podcasts with Pete Davidson, the comedian, and NFL legend Michael Irvin. So we talk too about just podcasts taking off, and now it's not just audio anymore, it's video. So is this a big opportunity for this company or just a nice side business?
No, I think it's a big opportunity. I don't know about you guys, but I can consume 5, 10 times more content when I can listen to it in the car and listen to it on a bike ride or whatever. It's not just about reading anymore. People want audiobooks, they want music, they want videos, they want podcasts. There's so much opportunity, and both of these brands have just a wild opportunity, long term, gathering subscribers and bolting on new opportunities that drive operating efficiencies, add AI to the mix, and more engagement, better profitability. There's just a lot to like, and you don't often get a compounder on sale like both of these companies. So you should take advantage of it if you can look through some of the short-term, kind of noise.
Eric loves Netflix.
Yeah. Definitely. Well, what? No, go ahead.
No, go ahead.
Okay. We were just saying you really love Netflix. Hey, before you go, I think we'd be remiss considering the day that we've had. We've seen broad-based selling, and we're trying to make sense of geopolitics, news out of the White House, Greenland. There's lots of stuff. We love talking to you. Amazon, Taiwan Semi, Apple, Alphabet, ServiceNow, Walmart, Liberty Media. These are among your top holdings. Anything in terms of how you think about the potential for opportunity in this investment environment? Anything changing? Just quickly before we go.
Nothing's changing too much. It's still important for consumption as well as the consumption supply chain. Who's allowing all of this consumption to happen? When you combine the two, that's the logo ETF, and it's a pretty interesting compounder type of portfolio that's still pretty concentrated at 30 names.
All right,
Eric, always good to see you. Thanks for
great to see you.
Hanging out with us.
I got to come out here.
Yes, yeah. We will.
I think the studio is about 10 degrees.
We were out there last year, and it was actually kind of June gloom when we were out in San Diego.
Was it kind of June?
Oh, it was, yeah.
I don't know.
It was, but
Was it? I don't remember that.
I remember.
I can't remember last week at this point. Hey, Charlie never forgets anything when he's watching the markets and covering it all. Charlie Pellet, take it away.
Hi, thank you very much. And here's what's going on. Down day on Wall Street. This update, this Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That is goldencrestmetals.com/guide. Keeping an eye on Netflix shares after hours, the big earnings story. Netflix did deliver fourth quarter results that largely beat Wall Street estimates, but it also issued a cautious forecast for the months ahead, citing higher program spending and the cost of closing its deal with Warner Brothers Discovery. After hours, we got Netflix down now by roughly 3.9%. Eric Clark is Chief Investment Officer at AccuVest Global Advisors. He told us moments ago that, yes, yes, he will be a buyer on this decline.
Bigger picture, nothing's really changed with the business. It's just that people have left Netflix stock because of the Warner Brothers, the time that it takes to get a deal done like this. So people just say, I just don't want to have my money tied up in something that's going to be a little more uncertain than maybe, quote, dead money. That's the opportunity.
Eric Clark of AccuVest Global Advisors also out with earnings after the close of trading. United Airlines, it did beat Wall Street estimates for the fourth quarter as it anticipates a strong 2026 driven by strong demand from high-spending domestic passengers and international travelers. Stocks lower today. Geopolitical concerns sending the Dow, the S&P, NASDAQ, the NASDAQ 100 index, and the Bloomberg Mag 7 index all lower. Only thing higher today, the VIX. The VIX now just above 20. S&P at 67.96. Key takeaway closing below 6,800. Today we did see the S&P down 143, down 2.1%. The Dow down 1.8%. NASDAQ down 2.4%. Your 10-year 4.29% with the 2-year 3.59% and the 30-year 4.91%. Gold surged 1.9%. Gold at a record 47.60. West Texas Intermediate crude up 1.5%, 60.34 a barrel, and Bitcoin down 3.7%, 89,513 on Bitcoin. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Netflix shares, let's stay on this. The company shares fell in the after hours as much as 5.1%. This after it forecast first quarter EPS below the average analyst estimate. The company also plans to pause its share buybacks in an effort to accumulate cash to fund the pending acquisition of Warner Brothers. I want to bring in Bloomberg Intelligence senior media analyst Geetha Ranganathan. She joins us from Princeton, New Jersey, where Bloomberg Intelligence headquarters are. Geetha, just your takeaway from this report. The outlook is a concern. Spending on content. Got to tell you, this is like an age-old story for Netflix, right? The concern about, oh, you guys are spending way too much. We could have had this discussion a dozen years ago.
I know. And yes, content spending. So it was up about 7% in 2025. They're projecting about a 10% increase in content spend going into 2026. And then, of course, you have the costs related to the Warner Brothers deal. And I think it's not just the cost side, right? Yes, operating margin, the guidance of Tim looks a little bit light. It's below 32%. I think the street was looking for something like closer to 33%. But also the ad revenue, definitely not bad, but not gangbuster. So this is the very first time that they've actually reported advertising revenue. They said it was about $1.5 billion in 2025. They expect to double that in going into 2026. Again, definitely not bad, given that this company made its foray into ads just a few years ago versus all of the other media giants. But again, not really a number to kind of get too thrilled about.
So that's not I was just going to ask, is that in line or below or above the expectations that you've been making of late? I mean, nice to get some new data from the company, especially when in recent quarters they're not doing the same sort of disclosures they have in the past.
No, absolutely. I mean, so really 2020, as we kind of zoom out and we just take a look at Netflix, so 2024 was all about subscriber growth, right? They had about 42 million new subscribers. 2025 was all about pricing, right? Huge price increases. Again, pretty stable subscriber growth. They obviously did add close to almost 25 million subscribers. But then 2026, as we kind of looked at 2026, here was like the big head scratcher, right? What is the big growth catalyst for this company going into 2026? And that's really where people were wondering whether that's why they had to buy Warner. And of course, one of the big things that everybody was looking for was ad revenue. Again, it has gotten off to, I would say, an okay start, but slightly on the lower side than I think people were expecting. People were probably expecting something closer to about $2 to $2.5 billion in 2025. So definitely, I think, fell slightly lower than general expectations.
I always think about, Geetha, like what's the next markets or how much more is there out there? And in their company release, they talk about, we relish competition, work to earn more of our consumers' attention. And they say, despite our success over the years, our share of TV time remains below 10% in the major markets markets in which we operate. And then they said, for example, according to Nielsen, in December, our share of U.S. TV time reached an all-time high of 9%, up 0.5 points year over year, yet linear TV still comprises over 40% of U.S. TV screen time. You know, is this just blowing smoke, or is it really that there is still a lot out there for either Netflix or Amazon or some others to still grab when it comes to screen time?
Oh, absolutely. There is still a lot more room for streaming to grow, and I think it absolutely will. So I think one of the big things that we've seen, especially towards the end of 2025 and going more into 2026, is that, you know, most of the marquee sports properties are now moving to streaming. So obviously you had the big launch of ESPN, you know, for the very first time in the history of television. All of the marquee sports are now available for people to watch on streaming. They don't have to subscribe to a pay TV bundle anymore. And I think that makes a huge difference. You know, consumer behavior is changing. It's changing rapidly. And so obviously there is, a lot more room for a Netflix, for an Amazon, as you pointed out, but also equally for a YouTube to grow. Mm-hmm. And this is where you have this whole debate with AI, right? Because as AI comes in and kind of democratizes content creation, you have more and more user-generated content. Are people going to be spending more time on YouTube and less time with like premier platforms like a Netflix, like an HBO Max?
I've just seen so much junk.
Is obsessed with YouTube.
Yeah, but not with the AI junk.
No.
I mean, social feeds. Have you seen anything good? Geetha, I mean, I've seen nothing good, nothing creative. It's like the junkiest.
With AI, you're talking about? Oh,
like
you're not talking YouTube.
No.
Oh, I was talking
like
YouTube.
the junkiest junk you can find out there.
Not yet, Tim, but I think just give it about a year or two, and I think soon we're going to be seeing pretty high quality stuff come out. I mean, I know some of the industry experts have basically projected that you know, another 2 to 2.5 years, you will see the first high quality, fully AI generated movie, come out. So again, have to wait and watch, but definitely. Possibility, and definitely something Netflix is preparing for.
I wonder what that looks like. I've watched some stuff that felt like it was written by ChatGPT. That's why
I can't wait till I can do something and put, Tim and K-pop Demon Hunters or something. Wouldn't that Be fun.
We're going to talk to Felix Gillette in just a minute. And this is, is a huge challenge for
Wouldn't
Hollywood.
he be great in like just taking an AI generated Tim and putting
The
it in there?
my kids love the K-pop.
America's Top Model,
the
perhaps.
Songs. I don't know what. All right, we got to go. Geetha Ranganathan, Senior Media Analyst at Bloomberg Intelligence, joining us from Princeton, New Jersey.
Shares of Netflix still down 4.8%. We do joke around here, but we're watching the market here in the aftermarket. We're waiting for that analyst call to start. Do not go anywhere. Where are we going?
Felix Gillette. That's
Felix
next.
Gillette.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg, keeping an eye on Netflix shares. The big earnings story after the close of trading, down now by 5%. It did deliver fourth quarter results that largely beat Wall Street estimates, but it also issued a cautious forecast for the months ahead, citing higher program spending and the cost of closing its deal with Warner Brothers Discovery. Now, again, after hours, we do have Netflix down by roughly 5% in the regular session. Warner Brothers Discovery down 1.2% today. Paramount Skydance today was down by 2.1%. A down Tuesday to kick off the brand new trading week. Wall Street, in fact, had its worst session since the April meltdown. Today, the S&P finished the session at 67.96, down 2.1%. Dow Industrials down 870, down 1.8%. Nasdaq was down 2.4%. All of this on geopolitical tensions. The Bloomberg Mag 7 index down 3.1%. Every single stock in that index declined today. The 10-year at 4.29%, with the 2-year 3.59%, the 30-year 4.92%. Spot gold surged 1.9% at a record $47.58. Silver at $94.50, up 0.1%, and West Texas Intermediate crude up 1.5%, $60.34 a barrel. Bitcoin down 3.8%, 89,391 right now on Bitcoin. Treasury Secretary Scott Bessent says a Fed chair pick could come as soon as next week. Now, Bob Michael is Chief Investment Officer for Fixed Income at JP Morgan Investment Management. And right here on Bloomberg Business Week Daily, he told us he'd like to see Bessent get the job or BlackRock's Rick Rieder.
Reader's number 2 for me. I've known him for close to 40 years. I think he'd be an excellent Fed chair. I think he'd be somebody very different. Let's get a true bond markets practitioner in there who's had to live with the aftermath of Fed decisions.
Bob Michael of JP Morgan Investment Management, interviewed on Bloomberg Business Week Daily. Again, recapping stocks lower with the S&P closing below 6,800, 67.96, down 2.1%. Netflix after hours down now by 5%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, thanks so much for that update, Charlie. Do appreciate it. Looking at shares of Netflix in the after hours, still a movement lower. Down right now by about 4.9%, bouncing around a little bit. That call expected to start in just about 3 minutes.
Yeah, and we've been talking about it. A lot of it has to do with the company boosting spending on programs in 2026 this year, so boosting spending, and that, of course, eats into profits, so some concerns about that. We've got a great voice, Felix Gillette, media and entertainment editor at Bloomberg News. He's the author of It's Not TV, The Spectacular Rise, Revolution, and Future of HBO. He's here in our Bloomberg Interactive Broker studio.
Maybe that future of HBO goes to Netflix.
Yeah, exactly.
Yes.
I mean, so we're watching, we're waiting, but there is some concern already about spending, but these guys have to spend, right, in order to keep people watching.
It's a competitive world. That's why they're out there, proposing to buy Warner Brothers Discovery. They're talking about they're projecting doubling their ad revenue in 2026. They revealed, $1.5 billion in ad revenue this year. And, if you want to grow that advertising base like they want to, you need live programming, you need people in their seats, you need to spend.
We just had this fascinating chat with Geetha Ranganathan, and the end of the chat, I was like, we got to talk to Felix about this, and that's AI, and AI content. And I've yet to see an exact look. The stuff blows my mind from just a technical perspective, and like what it can do. I've yet to see anything that's good. Yeah. Geetha says, wait 1 to 2 years, we could start to see that. Is that what we're going to be watching on Netflix?
I mean, I think right now where you're seeing it show up most is in the influencer space. Yeah. That's more on YouTube. It hasn't really gotten to the point where you're seeing shows or feature-length movies with, AI-driven. Will we get to that point? I don't know. I'm a little skeptical. I'm kind of more like the Ben Affleck, Matt Damon. I don't know if you saw it. They were on Joe Rogan recently talking about this, and they were saying, they see it as more like something that will be another tool in terms of, lowering costs or special effects, but not something that's going to just generate movies whole cloth.
I'm halfway through The Rip.
Yeah,
haven't finished it. Speaking of those guys, so no spoilers, please. Right. No spoilers.
Yeah.
No, go ahead.
Well, and I think that's one of the uncertainties hanging over Netflix and everybody else. But yeah, for the time being, does that like really feel like it's going to disrupt Netflix and what Netflix serves up? Not so much. I mean, you do see them, they're making the move into podcasting and trying to get more topical content. All of that feels a little bit more vulnerable also to AI disruption to me because it's, you know, slightly less production intensive.
I try to think about, Felix, how it plays out. Is it that an avatar, you could make it without actually using the actors, you know? I mean, you basically don't know who the actors are, right?
Yeah,
Like,
I mean, already, like, all of those, you know, giant battle scenes and everything that's moved towards, you know, special effects in recent years, you could just see this as kind of a natural evolution of that. I think what's more difficult is, you know, the whole, you know, storytelling narrative, coming up with good script and then executing, you know, having actors that people connect with, the human part of it. I think that's still a fairly long way away.
We also spoke with Eric Clark a little earlier of Rational Dynamic Brands. He's got this logo, AccuVest, excuse me, formerly of Rational Dynamic Brands. He had an interesting take, and this is what I wanted to bring up with you. He said, if Netflix were able to get their hands on that Warner Brothers Discovery IP, we could start to see some really interesting next iterations of some of the famous HBO shows. And he even brought up what's a spin-off of The Sopranos, for example, if you get a bunch of Netflix money and talented writers. Right. And I'm thinking to myself, what is The Sopranos without James Gandolfini?
Right.
So, like,
could you bring him back? Could you have his image? You know, yeah, like
that's where we are.
I mean, you know, that's a possibility, right? The likenesses and bringing back people's voices is already quite possible.
does Meadow actually survive and create, like, become a mob boss?
Yeah, I don't know. It's kind of hard to imagine an entire performance. You know, could you do like little shorts?
Yeah.
I feel like that's where the technology is at this point.
But is that where a big part of the value is for Netflix if they actually do get this asset?
I think the value is in the franchises themselves. I mean, I think The Sopranos is a valuable franchise that could be extended in various ways. Game of Thrones, DC Comics, Harry Potter. I mean, it's all those huge franchises that are a part of the Warner Brothers Discovery library that I think are going to be incredibly valuable. And it's a thing that Netflix has kind of struggled with over the years. You know, they've been able to do one-off shows, you know, something like Stranger Things, they've been able to kind of franchise. But, you know, that IP and coming up with characters from scratch is still difficult. And I think this is what, you know, Netflix sees as a really incredible opportunity for, you know, not just the couple years ahead, but like decades from now.
I mean, listen, if you probably talk to Netflix or you talk to Paramount Skydance, they're going to say this is really important to, you know, kind of our strategy going forward. Does whoever gets this, you think, give them an edge, a more dominant position going forward? I mean, is it, I keep bringing up, there's some story I think that we wrote here at Bloomberg that it was about developing or determining who kind of wins in Hollywood going forward. Is it that important?
I think it's pretty huge. Yeah, okay. I mean, I think it's going to shake up the entire landscape. I mean, it's just an enormous amount of valuable IP. I guess the question is always, you know, we're now 25 years into people coming along and trying to buy this company and thinking they had this grand vision for it. It always looks better on paper, and then when you get to actually put it into practice, it's hard. It's like there's a lot of different brands, a lot of different people, a lot of different expertise. It's hard to put them all together.
And maybe that's why the shareholders have been really skeptical of this. Netflix shares down.
I mean, they've kind of heard the sales pitch a couple times now. AT&T, Discovery, all the way back to Time Warner, AOL. You know, again, people have been seeing these assets for so long.
It's literally never worked.
It's never worked. Yeah. But, you know, Netflix has had a track history. They've been good operators. They've kind of, people have been skeptical about them, you know, for a long time now. And they've, you know, continuously kind of proven people wrong. So I think they'll say, we're going to prove people wrong again and actually, you know, make good use of this for the first time ever.
Just got about 20 seconds. So we're still seeing Netflix down about 4.8%. What are you listening out for, or you want to make sure somebody's asking on this call with investors, just quickly?
I mean, I think they're going to be reiterating their commitment to movies in the theaters. I mean, I think that's the whole Netflix sales pitch that they're very focused on right now. That's been the big concern in Hollywood. I think they're going to continue to bang the drum and say, yes, we believe in 45-day window for the Warner Brothers movies in theaters once we acquire them.
Thank you so much. Felix Gillette, Bloomberg News Media and Entertainment editor, author of It's Not TV, The Spectacular Rise, Revolution, and Future of HBO. We're back in a moment.
You're listening to Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio.
All right, everybody, we're getting ready to wrap up on this Tuesday edition of Bloomberg Business Week. Just a reminder, in case you missed the market close, we did see stocks here in the U.S. pretty much closing near their worst levels of the session, down 2% on the S&P 500, down 143 points at 67.96, and the NASDAQ 100 down 2.1%, a decline of 541 points. That average closing at 24,987.
We're about to talk about some companies that reported earnings today, but just to look ahead for tomorrow, we're going to see Johnson & Johnson report early in the session. Halliburton is reporting. Charles Schwab is reporting before the market. As far as aftermarket looks tomorrow, Kinder Morgan, Pinnacle Financial, Knight Swift Transportation, and CACI International among the companies reporting after the bell.
All right, so we're going to get really busy. We should remind everybody that we're going to actually be talking to Rick Wurster, President and CEO of Schwab. That'll happen on Wednesday. So looking forward to a conversation with him.
Tomorrow's Wednesday.
Tomorrow is Wednesday.
Yeah.
See, this is going to happen all week, folks. Sorry. I did that
okay.
this morning on the call, didn't I? I'm like, well, that's tomorrow. And you guys are like, no, it's Tuesday. Exactly. I'm Carol Masser along with Tim Stenovec. Let's get to some stocks on the move. With us to do that is Bloomberg News equities reporter and deputy team leader for U.S. equities. She is Carmen Reinecke joining us here in studio. So Netflix, we got to talk about this one. This was an outperformer today.
Yeah, and then
was it? No, I'm thinking of another name. I'm thinking of Intel. That was an outperformer.
It's funny. It's like almost like we haven't spent the last hour talking about Netflix.
Oh my God, these long weekends, man.
But Carmen was gonna let you go with it because she's so kind.
Because she is so nice.
Should we start